to the Friday morning market wrap. It's been an interesting night overnight with more US dollar selling. It seems that some analysts are now saying that they're focused on the fact that even though the Fed's going to hike, it's not going to hike that much, and therefore they are buying euro and Aussie and yen and sterling. That to me seems a bit like ex-post rationalisation rather than before the fact. It makes sense that anybody with half a brain could have seen that when the Fed does hike, that they are going to not be overly aggressive in the rhetoric that goes with it, lest that sends market into a funk again. So, you know, the idea that because the FOMC minutes locked in the December hike and now everyone's buying is because they're all concerned about the Fed's not going to hike that much. Well, they're all a bunch of dicks. That's been so obvious for so long. I advocated one and done in September. But, you know, this kind of ex-post rationalisation drives me around the bend. It must drive traders around the bend as well. This is just making up a story to fit the price action, for goodness sake. Anybody that can look at a chart seen what happened in the Aussie. The Aussie's broken through a 1 month downtrend. It's had a run up higher overnight, 72.14. It's bumped into the old trend line. 72.40 is a big level on the week. Let's watch that. You know, blind Freddy can see that dollar yen got oversold on the short term. It's come back and tested the daily uptrend. You know, Jesus. You know, we've had euro come down, fall out of bed this week, bounce off levels just near that massive trend line that goes back to 2000 and rallied. Surprise, surprise. We've had the DAX break up and through a big trend line. We've had sterling struggle, and then break through and get some impetus. You know, this kind of ex-post rationalisation just doesn't help anybody. You know, it's just rubbish. The reality is that the US dollar is a crowded trade. Everybody is on one side of the lifeboat. And I know that's a crude analogy because you all know what I'm referring to, but that's the facts. Crowded trades always reverse on the slightest bit of change in sentiment because everybody's got the same position on. That's why positioning and sentiment are fundamental to foreign exchange and any other sort of trading. The other day, I've got a bit of a high horse here, haven't I really? The other day I wrote about the Bank of America Merrill Lynch survey and that, you know, the US dollar was a crowded trade. That's the key. People have suddenly gone, oh, duh. You know, oh, we're all in the same boat. You know, there's a million of us in this same lifeboat that's ready to hold 100,000. So they're starting to bail. Now, what that means is that we've got to see some sort of unwind. And prices genuinely have either time consolidations or price consolidations. Time consolidation is where the market goes sideways for a time. Price consolidation is where it either goes up or down depending on the overriding trend. So what you've got at the moment is you've got that. Now, you know, we've got the ECB in a couple of weeks. We've got the Fed a couple of weeks after that. That could change everything. But for the moment, we're getting a bit of a squeeze. We're getting a bit of a squeeze on the shorts in the Aussie. We're getting a bit of a squeeze on the shorts in the euro. We're getting a bit of a squeeze on the shorts in the sterling. Now, euro sterling is an interesting trade. That's a really interesting trade. That kind of suggests that the euro could really get a wriggle on. Euro itself, I'm targeting 107, 108.14 probably, somewhere like that. And Aussie, if we can get through 72.40, we could probably see 75, maybe even higher. Got to get through 72.40 first. Anyway, overnight stocks did nothing. Commodities, oil was down again. Copper held at 208, but that's still roughly the lowest level we've seen since 2009. And iron ore managed to bounce back to basically be unclosed from where it was this time yesterday after crashing on the Dalian exchange in China yesterday. Let's do a quick look at the charts, and then I'll let you go, because I want to try and make these a bit more faster. Here's my my Euro weekly. You can see here isn't that a nice? If the Euro manages to finish here, that is a nice end of trend kind of, not end of trend, but you know what I mean, end of move. Kind of candlestick. We're outside the bottom of the bollies. You know, we don't normally stay outside the bottom of the bollies, although it has persisted for 3 weeks. If I look at it on a daily basis, I've got a buy signal. Got a buy signal yesterday. in the euro, and so it's 107. Yeah, I was right the first time. 107.94 is the level that I'm targeting in the euro straight up. If we then have a look at sterling, where is my friend sterling? For some reason sterling's nowhere near euro, which makes no sense. So we've had a run up. It's failed at the 200-day moving average, and it's come back. It's going to retest this trend line. It might even slip a bit below, and then we'll see. I'm not overly bullish sterling, to be honest. If it should be the second strongest currency on the planet at the moment, because the Bank of England is signalling that the market's got it wrong with regard to when they're going to tighten. But for the moment, it's struggling a little bit in favour of the Australian dollar, where it seems people are starting to think the RBA, well, hello, the RBA is not going to ease unless they have to. We heard from Kelvin Tan, who's the Chief Investment Officer from UBS Wealth in Singapore, yesterday, saying that people are buying back into the Aussie. We heard from Westpac a couple of weeks back, and hats off to them, that real money was back. And even when I published that article at Business Insider the other day saying that foreign investors have abandoned the bond markets because the Aussie's fallen, I spoke to the analyst at Westpac Sky, and she said that they'd started to notice an improvement in some of the bid to cover ratios and those kind of things. And it's more than likely, probably is already happening, that foreign investors are starting to buy a few Aussie bonds as well. So you can see where the Aussies run into here. It's always difficult when I'm sharing my screen, but it's gone to here, 72.16, which is right on that old trend line. 72.40. Well, it's actually a bit low. 72.25 today is the breakout level, and then you can get a run towards the 200-day moving average at 74.80. So look for a move, I think, if for 74 to 74.80, somewhere like that. If we have a look at the S&P, let's just, there it is. So you can see there's a nice old chart. I better write about that one in chart of the day, I think, today for AXI. We've had a wedge, a breakdown, a break up, a breakout, a rejection. Interesting, really interesting price action. Lots of levels to trade off, but you can see the lines that are pretty much driving that. So the level on the SPY today in MT4 terms is 5289. I don't think it's going to get there. It's in a sell zone. I missed the buy signal the other day off the dailies, just mainly because I was busy. So I've been wandering around the house kicking the cat. Well, not quite, but you know what I mean. Here on the S&P, if we have a look at the weekly, so you can get some context around that trend line, so that's back on the old uptrend channel. Had a big move high, had a big move down, a big move high. This is an indecisive market that's not exactly sure where it's going. That rally sell-off doesn't really say anything. But if you see a down candle today, you know that this, sort of 2080 to 2100 region is still pretty solid for the S&P. So it's a really interesting close on dollar yen. There's the dollar yen trend line that I was talking about before that Blind Freddy knew about. So lots of charts, lots of levels, a little bit of a reversal at the moment as markets reappraise what's going to happen. The Fed is never going to hit the market over the head. It's already seen what happened to the taper tantrum. It's already seen what happened in August and September. It's going to raise rates. It's going to continue to raise rates, and it's going to do it gradually. But it's certainly not going to try and spook the market. So anyway, that's it from me. There's not much out today. Draghi is speaking tonight, though, as is Jens Wiedemann. A bit of a yin and a yang there. A bloke that wants to do more QE and probably a bloke that doesn't. So keep an eye on those for the euro. Otherwise, there's not much out. A few speakers in the US, but most people think that, and market pricing reflects, that the December rate hike is pretty much a lock. So anyway, that's it from me today. Have a lovely weekend. I'm Greg McKenna. You can find me at Gregory McKenna on Twitter. You can find me at Business Insider. You can find me at AXI Trader under the market news and blog. And you can also find me at my own website, gregmckenna.com.au. Have a great day, great weekend. And for those of you in New South Wales and Queensland who are about to be scorched today, stay safe and watch out for bushfires, and also watch out for snakes. Where we are here in the bush, days like today where it's going to be 40 degrees, we sometimes get snakes come up to the back door, which is suboptimal. Sharks in the ocean, snakes in the backyard. Gee whiz. Anyway, have a great weekend. Bye for now.